Thanks for clicking. The Canadian real estate correction is far from over, according to Oxford Economics, RBC, and the Bank of Montreal. A new report by Oxford Economics says that Canada's real estate market is in for a 30% price decline from peak to trough, and its economy is headed for a hard landing. This report was echoed by RBC, which recently said that Canada's housing correction is far from over, and we're likely to see another 14% drop in our house prices. For its part, the Bank of Montreal recently said that we're likely in for even more price shocks coming soon, as the real estate market has been propped up by leftover pre-approvals from the last few months before rates went up. While Canada's fall real estate market is usually one of the busiest times of the year, Indeed. The report from Oxford Economics and notes from RBC and BMO say that any gains that we might see in September's market will indeed be short-lived. So what I want to do today is go over the report from Oxford Economics, take a look at what RBC and BMO say about the future of Canada's real estate market, and then discuss what to look for next. Speaking of next, we are set to receive the release of September's real estate data from the local boards within the next week or so, which will show us how busy our fall real estate market has started. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into Oxford's report. Oxford Economics grounds its predictions for the real estate market in the assumption that interest rates will go up to 3.75% in October, which will be the peak of our interest rate hikes for the remainder of the year. Oxford says that after raising interest rates by 50 basis points, the Bank of Canada will pause to assess the economy, to assess how high our inflation rate has come. The higher rates will lead Canada's real estate market to correct by another 16% and will bottom out by the third quarter of 2023. The report says that the major downturn in pricing will leave the price of Canada's real estate market only 7% above pre-pandemic levels, which Oxford says will only really hurt those who purchased over the past 2 years and will leave long-term existing homeowners relatively unscathed.
We're all fine, everyone's fine.
So, according to this report, rates are only going up another 50 basis points to top out at 3.75%. Housing market prices will correct by another 16% by the third quarter of 2023. And our real estate prices will bottom out only 7% higher than pre-pandemic levels, erasing basically all of the gains made in real estate pricing over the past 2 years. This sentiment was echoed by RBC, which only a few weeks ago had predicted a 12% further decline in Canada's real estate prices and has since raised its estimate up to 14%. In an interview with the Toronto Star, RBC economist Robert Hogue said the revised predictions reflect higher interest rates that the bank thinks are coming in the short-term future. Higher than that was predicted by Oxford Economics, RBC says Canada's interest rates topping out at 4% by December. Hogue says that these higher interest rates are going to lead to price declines for the foreseeable future, noting it's a correction that is unfolding right now and we're not close to the end of it. So RBC doesn't see prices declining as much as Oxford, but notes they are going to continue to decline nonetheless in the range of 14%. But RBC says that rates are going up higher than Oxford predicts, all the way up to 4% by the end of December. So another 75 basis points in rate hikes within the next few months. And BMO also says that real estate prices are going to continue to decline and points to the amount of pre-approvals out there, which it says have been propping up the housing market. Armed with pre-approvals from 90 to 120 days ago, buyers today still have a lot more buying power than they will in a few months. So BMO is saying that these buyers which have pre-approvals dated to 3 months ago when rates were much lower have consistently propped up the price of Canada's real estate market over the past few months. And once these pre-approvals expire, we're going to see even more steep price declines. And indeed, we're seeing this in Toronto right now with the resumption of bidding wars as buyers attempt to get into the market before those pre-approvals expire. Laurie Greenspan, a realtor in Toronto, says that buyers are feeling the pressure to take advantage of the interest rates that they locked in months ago by purchasing before their pre-approval expires and before rates go up significantly. And as such, BMO says that the numbers we see in September won't reflect the true state of the market that we're going to have by the end of 2022. Indeed, as noted by BMO, there is still an extremely heavy interest rate shock to absorb, and it will likely take more time to play out. So, in summary, both Oxford Economics and RBC sees Canada's real estate prices falling by another 14 to 16% before bottoming out. Oxford Economics sees interest rates rising to 3.75%, followed closely by RBC at 4%, and BMO does not offer an interest rate prediction, but does say that our current real estate prices reflect old pre-approvals. And once those pre-approvals expire, once we start to see the higher rates be reflected in the real estate market, we're going to continue to see price drops. We're going to see continual shocks to the real estate market. And I think to a certain extent, all three are telling the same story. Although we might see an uptick in sales and prices when we receive September's real estate data in a week from now, that doesn't mean that we have bottomed out. In fact, the Bank of Canada has just raised interest rates again by 75 basis points. So while we might see a brief uptick in the market, all three of these perspectives are saying that it's going to be short-lived, that we still have a ways to go until we hit bottom in the price of Canada's real estate. So I think if we do see a brief surge in prices and sales over the next week or so when we get September's real estate data, we are going to hear calls that Canada's real estate market has bottomed.
He gets it.
But I think what these reports show is that this will probably be a blip and that we are probably most likely not done our real estate fall, at least for the foreseeable future. So regardless of what September's data shows, I think that we are in for continual price declines, even if we see a brief uptick in prices once we get that data next week. With that said, we'll obviously have an update out on that data on this channel. If you want to get that update, make sure you click like and subscribe. But for now, thanks so much for watching.